Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka. And what a spectacular day it has been for the market. Looking at the GDP print last evening, of course, we knew that, we could expect a gap up open, but a 350 point kind of a move on the Nifty in a single session, you don't really get to see that on a daily basis. And an 1100 point rally on the Sensex. Of course, broader end of the markets also did fairly well today, especially since there were, concerns regarding any kind of correction that could take place in the broader end of the markets. But even the broader end of the markets, the Nifty mid and small cap indices participated in the rally, but clearly the benchmarks walked away with the cake, especially the Nifty hitting a new high of 22,350 in a single day. Of course, we've broken out of a range over the last 6 to 7 sessions. We were stuck in a range, and looks like we have broken out of that for the time being. And if you look at the sectoral movers, metals 3% uptick there. Banks did well. The Nifty Bank Index reclaimed that 47,000 mark today. 2% gains coming in there. In fact, ICICI Bank was one of the top contributors to the Nifty's rally, aside of Reliance Industries. Aside of that, look at the other gainers. Autos, of course, they were also doing fairly well. The sales figures trickled in today. PSU banks were among the top sectoral gainers. What didn't do well was, of course, the IT pack. The Pharma pack also came under pressure. There was news flow around Dr. Reddy's, and we'll be talking about that with our guest as well. So Pharma under the weather. Media also continues to sulk after that mega Reliance and Disney joint venture that was announced. Aside of that, if you look at the Nifty gainers, of course, as I mentioned, metal names, Tata Steel, L&T as well, JSW, Titan, IndusInd Bank, even Hindalco was among the gainers on the index. On the losing end, you had Dr. Reddy's, Sun Pharma, as well as HCL Tech, Infosys, Britannia. These were some of the losers. But, those were the movers and shakers in trade. Let me quickly bring on board our guest for today. Joining me is Mayuresh Joshi of, William O'Neill. Thanks a lot, Mayuresh, for taking out time and joining in this afternoon. What do you make of the, kind of rally that we saw today in the market? Do you think we have decisively broken out of the range that the Nifty was stuck in over the last few sessions? And of course, it was, something that was driven by strong macro data. But here on, do you think, this could go on and 22,500 could be on the cards in the next couple of weeks?
Afternoon, Nandita. I think any number now is a possibility, because I think out of the range that we've now broken out of, and the kind of strong macro tailwinds that we are probably getting, the GDP print was a stunner yesterday. And the kind of reaction that you've probably seen in the market, obviously also aided, in my opinion, by short covering. Nevertheless, I think even the broader markets participated. And therefore, the take is that micros doing exceptionally well for India. And probably the growth momentum in terms of earnings from a micro perspective and from a top-down perspective, the kind of expectations that the market now has, and the numbers that have been put in by the exchequer in the budget of going down the fiscal path of 5.1, but still maintaining those fiscal targets in lieu of robust tax collection, so on and so forth. Healthy corporate balance sheets as we speak. And therefore, I think India is very well placed. So structurally, I think the momentum probably continues for Indian markets. FIIs, FDIs, who probably been net sellers over the past few days, I think might be reconsidering their take on the market again.
Right, metals, this pocket was shining and how in today's session, right? Look at the likes of Tata Steel, 6.5% kind of rally, JSW Steel, even Hindalco that, got beaten black and blue. There was quite a few news flow around that stock, right? Of course, Novelis IPO, concerns about, where the money will be used. But still, the stock saw fairly a good comeback, and, there has been an upgrade also coming in from CLSA. But, can you pinpoint any reason as to why we saw such a strong move when it comes to the metals pack? Or do you think there's just, sector rotation at play and people are really moving into stocks that have been underperformers?
Maybe that's the case, because I did not probably read anything into why this sector moved up so significantly. But two things here that might act as tailwinds going forward. One, I think what the market is probably expecting in terms of a huge stimulus package from China. I think that has not really come through. But if that really comes through as a support to their domestic economy, to their flagging real estate sector as well, the kind of inventory levels across the metal chain, whether you talking about ferrous or non-ferrous, is at abysmal low levels as we speak. And therefore, if activity starts picking up with any kind of stimulus announcements that probably comes through, I think that is what the market is probably looking at in terms of a trigger point. And you're right, absolutely, Nandita. I think the second aspect obviously is also that domestic growth continues to be on a very strong footing. So the kind of capex in infrastructure, in manufacturing that can be expected over the next few quarters will basically mean that the offtake is going to go significantly higher over the next few years in terms of consumption domestically across the metal chain. Input cost volatility will continue, but I think the companies will have their own hedging policy and the pass-through policy as well. So I think these couple of triggers is something that might create some element of earnings shift over the next few quarters as we speak.
What about L&T, Mayuresh? Quite a few factors here at play. The stock was up and about today. First electrolyzer, hydrogen electrolyzer in Gujarat, and it has won another big order today. And of course, we've seen also the GDP print. It has been largely led by investment-led growth rather than consumption-led growth, right? So quite a few factors working well for L&T. But here on, how are you viewing this particular stock? Because margin pressure has really been talked about when it comes to this particular stock, right? Things picking up on the margin front as well in the coming quarters.
Yeah, that should be a possibility. And you're absolutely right, Nandita, as you say, that it's a proxy to the Indian economy, because I think the kind of sectors that L&T caters to, right from heavy engineering, hydrocarbons, and in the new energy segments that they're probably getting into, I think the entire value chain, when it comes to India's infrastructure, when it comes to the manufacturing prowess that India wants to become, L&T is a behemoth in its own right. Obviously, in the past couple of quarters, input costs have eroded margin expectation compared to what the analysts on the street were pegging in. But to a large extent, as execution continues to improve and ramp up over the next few quarters, margin stability will be a given for L&T. Obviously, the kind of orders that they're also winning outside India, hydrocarbon orders as an example, I think they are good margin orders that come through, and large ticket size orders as well, which means as they execute these large ticket size orders and as the monetization in terms of revenue accretion starts coming through, I think it's a given that a very solid earnings growth led by stable margins will lead to a very, very solid bottom line growth as well over the next few years. So I think it's an absolute proxy. If India is expected to grow at a good pace over the next few years, I think L&T absolutely mirrors that. Anybody holding on to L&T should continue doing so.
Holding on to L&T makes sense now. But I want to get in your thoughts on Dr. Reddy's. Of course, in the last few hours of trade, we got some bit of negative news flow around Dr. Reddy's. Walmart-led consortium has, filed a case against a number of drug makers, including, Dr. Reddy's, that have launched Revlimid in the US, right? What is your read through here? Is it a big setback for Dr. Reddy's? Because the stock clearly reacted to that and was the top Nifty loser.
So on the first point itself, I think Revlimid has been a blockbuster drug for most pharma companies. So I think if you look at numbers across the pharma chain, the bigger pharma companies, the Revlimid contribution has been quite significant enough. Now Revlimid will go off patent in March 26. So I think another couple of years down the line, we're probably going to have far more generics come through, and therefore diversifying their existing product portfolio in terms of key niche launches. Which Dr. Reddy's, as an example, is getting into biosimilars, it is getting into nutraceuticals, it is getting into these therapeutical chains as well. I think all these elements will add through in terms of their FTFs and their ANDAs, where all these niche components, as they get through the approval process and as monetization starts taking place, they are high margin products and drugs, which probably will get a decent amount of revenue share as they start monetizing this and launching these products over the next few quarters. So to that extent, the sentimental impact that can probably come through on Dr. Reddy's can linger on its price for a few days, for a few weeks. But the kind of portfolio launches that can get expected from Dr. Reddy's suite, I think can be significant enough over the next few quarters. They've incurred a large part of their R&D in terms of all these products onto their balance sheet. And therefore, as R&D expenses also start normalizing, you will see a partial pass-through effect happening in terms of positive margins getting reflected because of the savings on the R&D costs that they will incur as they start normalizing over the next few quarters. So maybe a sentimental impact over the next few quarters. The exact size, the exact quantum is probably not known. It might create an earnings dent. But as new products start coming through over the next few quarters, it will largely compensate for and if any of the earnings miss that can come through for this.
Right, last question really on the auto pack. Looking at the auto sales figures for the month of February, the trend is intact. CV makers have seen weakness, and so have tractor makers, right? But PV end of the segment is doing well, and two-wheelers as well. Looking at the Feb auto sales data, what would your top pick be in the auto space?
So I think actionables, if there is a pullback now within the large caps, I think M&M and Maruti both have given a decent set of. In fact, M&M's numbers were outstanding, in my opinion. They've ramped up their capacities to do almost 50,000 units a month to take care of the demand requirements that is happening on a monthly basis. Their order backlog is at 226,000 units, and a lot more launches expected to come and take place as well. Even Maruti within their mid segment, the kind of launches, the car designs that we've probably got, and let's not forget the after sales distribution and sales network as well. I think it creates a huge impact in terms of the resale value that customers also wish to derive. So I think four-wheelers within those Maruti, M&M on pullbacks, because they're trading a tad bit above pre-pivot levels as we see at markets.
All right, that's the view on the auto pack. But very last question, so to say. We still can't call it a weekend because, of course, we have a special trading session tomorrow, 2 hours of trade, right? But do you expect the action to be fairly muted? Volumes likely to be low. What are your thoughts? I mean, how should one really go into this special trading session?
So I think the way the markets are moving, I think investor traders would want markets to be on Sunday as well. Nandita. So,
don't say that. We need 1 day break.
No, but I think, the volumes might be thin, but the enthusiasm continues for the markets.
Right, of course. We'll see. Hopefully, we will see a lot of volume tomorrow, given the fact that, we've hit a fresh high today and, the momentum has picked up and how. But with that, Mayuresh, thanks a lot for taking out time and joining in. And I hope regulators are not listening to you and they don't end up keeping the markets open on a Sunday as well. But with that, I'll see you soon. And thanks a lot for taking out time and joining in this afternoon.
Right.
Well, with that, we've come to the end of this edition of Closing Bell. Of course, we are ending on a high, 22,300. We've clocked that level, and the Sensex has also, clocked in a 1,200-point rally. But, of course, we'll see you tomorrow morning as well at 9 a.m. with opening bell, as the markets are open for a special trading session, disaster recovery site. There'll be a switch to that, and which is why the NSE has facilitated this special trading session tomorrow. So, of course, tune in live at 9 a.m. and we'll catch you then. But for now, it's a goodbye from me and the entire team that put the show together.